In today's educational video, I'm going to share with you my all-time favorite advanced planning strategy that we use with our clients that got them to pay zero capital gains tax on $400,000 in their brokerage account. An opportunity that usually only comes once in a lifetime. Welcome back to Mark's Financial Playbook. I'm Mark Basile. When it comes to taxing your investments, you basically have two buckets. Over here, you have your retirement accounts, your pre-tax buckets, 401ks, IRAs, 403bs, SEPs, TSPs, basically all of the accounts that you haven't paid taxes on. But once you take a distribution from those accounts, you'll be taxed at ordinary income. Over here, you have your non-retirement accounts or your after-tax buckets, like individual and joint accounts, trust accounts, individual stocks like Google, Netflix, Nvidia, and Palantir. But you're either going to be taxed on those as either short-term capital gains or long-term capital gains. So if you sell one of those positions in your brokerage account and it hasn't been a year, you're going to be taxed at a short-term capital gain or as ordinary income. If you sell one of those positions after 1 year or longer, you're going to pay long-term capital gains. For 2025, these are the long-term capital gains rates. So if you're a single filer and you could keep your gains under $48,350, you'll pay zero capital gains tax. If you're MFJ and you could keep it under $96,700, zero tax. If you fall between $48,351 and $53,400, 15%, and married filing jointly from $96,701 to $600,050, you're going to pay 15% capital gains. And if you're single and your gains are over $533,400, 20%. And if you're married filing jointly over $600,050, you're going to be paying 20%. Like I said in the beginning of the video, I'm going to show you the strategy that we used with our clients to get them to pay zero capital gains on $400,000 worth of gains. So it was 2023 and the brackets were a little bit lower, but they needed about $115,000 a year to live off of, married couple. They had Social Security available to them, but they didn't want to take it. They were only 62 and they wanted to delay. They each had a pension that they were able to delay as well. So if we looked at the 2023 schedule, long-term capital gain threshold was $89,250 and the standard deduction was $27,700. So in that first year, we realized gains of $116,950, but they didn't pay any tax on it. The second year, which was last year, standard deduction was $29,200. Long-term capital gain threshold was $94,050. We sold off some of those great positions. He had Google, Meta, $123,250 worth. And then this year, married filing jointly, standard deduction, $30,000, threshold $96,700, tax-free room $126,700. Again, he paid 0% capital gains. This is federal. Of course, you have to pay state. No one can get away with that. So that left for 2020. So when he files taxes for 2025, next year in 2026, he has $33,100 left of that $400,000 gain that he was going to have to pay. We will sell those off too. Some of those positions he loved, so he repurchased them. So he gets a new cost basis. Now this strategy, like I said in the beginning, may only happen once in a lifetime. Why? Because you have to have other income sources sitting on the sidelines waiting for you. Pensions, annuities, Social Security. If you have a rental already coming in, strategy probably won't work. If you have an annuity and you turned on income from it, strategy probably won't work. So it's only before you start taking Social Security or any other ordinary income payments will this strategy work. So remember, we're going to do a video on tax loss harvesting, which you can only harvest $3,000 a year. But tax gain harvesting, each year, those thresholds move up. So not a lot of people are talking about it. So if you have any questions on this strategy or any other strategies, feel free to reach out to us. All of these links will be in the free PDFs and the links in the description. And again, thanks for coming, and we will see you in the next one.